So BTC starting to respond poorly here. We'll just go straight in with kind of me kind of spitballing the thought process here. I think a lot of people are kind of looking at, the wedge structure that we've got here on BTC. This is lower time frame. You can see, obviously, I quite like the top boundary and the bottom boundary for this, especially with the reaction that we saw yesterday in trying to hold this level. I think we saw the obvious run up yesterday as well. This is one I was tweeting about last night. This level here, I think, was always going to be the obvious kind of run target. And I think that, so I always try and use major touch points. I think I've referred to this before about, kind of like painting a story with price action. And each major kind of inflection point of price marks a new chapter in the book. So when we look back on the chapters that have been written, then we can see some of the standout moments from price action. And for me, the move that we saw early hours of this morning was the last major touch point for BTC, and it's a hugely negative one in my opinion. If we were going to drive certainly 24.7s or to try and hit the upside, I don't think this should be your reaction. So if we are continuing to note those kind of milestones of price action, then I think that the last milestone, the last chapter we have is this, which is a hugely bearish sign from my perspective. I don't think there's any way that we should be reacting like this from that high, because it just looks like a pure run of short stops and then continuation of puke. I'll also summarize as a whole from my perspective right now is that there are multiple higher time frame bearish divergences on a huge number of alts, and I still believe that we have yet to see the impulse to play those out. Right, so I am absolutely, number one, position short, number two, bearish about price action through this region. The hope, I think, for bulls is this is a trap for bears. Right? This is a trap to get people like me believing that this is a breakdown and that actually it manages to pull a big recovery. As I said, I really don't like the picture on the majority of things right now. I think there's so many garbage alts that just look as though the momentum has completely died off and that they're ready for downside, and we'll run through a number of those now. I think firstly, look at something like TRB is a very good example. You can see the slowdown in momentum through these highs, all the way up here, just diverging. So high, lower highs. And even this cluster here is diverging within itself. And I think there's a really good opportunity to see some significant downside on something like TRB. And again, here on the 12-hour, just representing the same thing, awesome oscillator divergence all the way through this region. Just that momentum tapering off towards the end of the run up here. So I think TRB is a good example of a market that is cooling off, let's say, right? It's cooling off. I think you've then got things like XTZ, which gave a really good run this morning. They're locked in this kind of channel formation, as we know a lot of markets are. Sol, BTC, all kind of captured within a channel. XTZ today swept all of the highs, hit the outside of the channel once again. Huge negative reaction on the 12-hour, closes a huge SFP against the former highs, and has reacted. So again, I think another market that just looks incredibly weak and looks as though it's done its kind of impulsive fuckery move to the upside before downside. And with these channels, I think you've got, some really nice kind of either target points or continuation points, depending on how we respond to the bottom of channels. But these are the sort of playouts that I'm expecting. I'm looking for these sorts of moves here. And I don't think that's too outrageous to be considering a 15% pullback on XTZ. I mean, I would love it to be lows, but certainly as kind of our starting point, I think this is a really sensible region to be pitching for on things like XTZ. You got other ones which are like Lux, and we discussed this on Sunday. So Lux was just continually hitting against this trend line up here. The distance between the bounces was getting shorter and shorter until eventually it pukes through, and then just because continuation. Small bounce overnight in line with the rest of the market, and then continuation back to the downside. Again, these markets, they just look like they're super simple to trade in this direction, given some of the significance of either the breakdowns or the divergences across the highs. I think there's a lot of alts that represent this picture, which is relatively scary for the bulls. And you got things like Sol, which again are going to be caught up in their trend lines here. Great reaction every time that we've touched it, and looks as though we're heading back down for another touch on these levels. I think the levels have been really well respected for Sol. I think this one in here at 44, this one's been really nice in terms of the respect on the lower time frames. Even again, the aggression shown here is pretty impressive. Are we 10% down from that high this morning? Jesus Christ. I would suspect that Sol would probably try and defend the lows at 42.30 if we start to rally up here, and then definitely defend the 42.90s. You've then got plays like Atom, which I think are, also very, very similar. You take a look at the 12-hour, you've got the range here, you're up against the range highs currently, and you're diverging all the way across the range highs. So you diverged all the way across the 1190s up into the 1250s, and you're up against higher time frame resistance as well. Like, a lot of these markets just look as though they want the correction. We also know that Atom obviously is just going up in this fucking ridiculous diagonal. So we're basically just being supported underneath here the whole way. And again, I think that whilst I think the market is going to hit the downside, and I don't yet think the impulses kind of truly come through to the downside, I'm not necessarily sure it's like fresh lows and all doom. That would be kind of the other side of the debate and discussion here. I don't think just because BTC is in this region here, and it's channeling on its 3-day, and everybody's looking at this, and we'll see multiple posts about this becoming a bear flag, over the coming days, I'm sure. But just because we're doing this, I'm not necessarily sure that means the play out is this. Right? That's absolutely something it could be. I think from my perspective, I'm a little bit more reserved in this. And I think that the kind of the more likely outcome from something like this is to come back down to the somewhere at the lows, somewhere towards the kind of overall range that we may develop, and then hold up there. And I think the same will be true of other alts. With that being said, I still think that ETH is the single most important market, and really the only one that matters from my perspective. I think that ETH 1700 is basically the pivot point of the entire market. So it's good that the indexes are correcting, because we wouldn't want to have seen crypto correct prior to the indexes, because that puts us in a really horrible picture based on the correlation. However, I think that indexes correcting now and crypto correcting now, that's okay. I'm fine with that situation. ETH at 1700 is super important, and I'm just going to use this as kind of the health of the market indicator. ETH has been one of the stronger markets. It's the market the majority of people are interested in. It's the market that's shown significant strength, certainly from a majors perspective. And 1700 is the level we would absolutely be expecting to hold. No doubts about it. 1700 for me is kind of the point that should be holding. If we retest 1700, we start to form some divergences, we get a good bounce, I'm happy to try and attempt spot. If we lose 1700, I think it's just hold shorts. Like, that's how simply I would put it. I think if ETH starts to diverge 1700, holds up at 1700, spends, let's say 24, 48 hours bouncing around 1700, probably a pretty good sign. And then the sort of play that we're looking for from this region is, there's a nice little consolidation cluster inside here, just in these two red candles here on the 3-day. So we'd be looking, ideally at something, that plays out probably like this, towards the 22s, 21s. This is the sort of thing that we would be looking for. Not necessarily sure ETH just comes into 1700 and, kind of it's nice and gentle and it just taps 1700 and bounces ferociously back to the upside. I think that there's probably, a good distance in here, another 5, 6, 7% that will travel below this level, but we want to see ETH holding above. Again, still for me, the most significant point on this chart from certainly the last 18 months, and therefore also imperative that we hold this level if the market wants to continue to the upside, and we want to continue to see that strength. If ETH loses 1700, then I think it opens the door back down to this. Yeah, so that's a pretty simple summary, and I've kind of just I've kind of just, run through the thought process here and, the kind of views that I have on the market as a whole. Still trying to remain as fluid as possible when it comes to a bias here, despite hoping the market goes down for this period of time. I would love to see the 1700 retest on ETH. I think that would be a really good indication for the overall market, and obviously being positioned short, I obviously want to see continuation in some of these divergence plays or sweep plays or resistance plays through this region. And ETH just responding just like BTC last night. Strong move up, really strong move from ETH, 1960, big failure point, and then continuation and breaks this low. This area yesterday was a really good level for ETH, and I think that this 4-hour close is also probably quite important. So we can see, and it's something that ETH tends to do relatively regularly. We saw quite a good protection of this low yesterday at 1870, and we just had, what was like 2 days of just trading into this level and trying to protect this structure. And so the close below, I think, would be important in terms of the break of the structure and then continuation lower. I'm not sure if there's kind of anywhere else I would try and pitch for lower time frame for ETH. I think it's probably just a case of, the kind of higher time frame look through and seeing how we perform below 1700. So man says, how would you short ETH now? And what is the trigger for, what is a trigger for a short now? Well, I think you missed the trigger, right? The trigger was the reaction. So I think, the trigger was this reaction. That's your trigger. So, I mean, even getting short in this region here after seeing it, you've got 3 hours to position short here before you get any movement. You've got 5 hours even with a retest back here. You have to run the stop above the high because there's zero reason why we should ever be trading back here. And then you're playing down to the 1700s. Right, so that would have been the trigger. But here, not necessarily sure you've got anything. It feels certainly more risky to be trying to trade into this than it was trying to trade in at this consolidation cluster here. If we retest this from underneath, maybe you've got a play here. Maybe you've got something here you could do if we trade back into this level. It's a pretty clear support level through here at 1870. So I mean, we shouldn't really be getting back above this. Obviously, if the bearish side is to play out. And then the other point is for anybody who's like, oh, I'm frozen out of short positions, or I didn't catch the ETH short, or whatever it might be. I think the reality is that there's multiple markets, and a lot of markets, still look pretty poor, and a lot of markets look as though they're going to have, relatively decent downside price action. So I think it's just maintaining focus on other markets. There's plenty of other markets that haven't yet had playouts of higher time frame structures. You just need to be more careful depending on how much size and leverage you're trying to use on your trades, that's all. In fact, I think that shorting ETH is probably one of the worst options, I think, because it's been one of the stronger markets, and therefore it makes it far more awkward to try and get into the short positions from, whereas I think other markets have been weaker for longer periods of time and therefore make it easier to position into the short side, I think. Like, that would be my play. And I guess that kind of subconsciously comes out in the way that I open this discussion, which is I was talking kind of basically about pullback and then long for ETH versus other markets. I was more, let's short these shitcoins, right? What's one of the better options for shorts at the moment? I think something like Atom still represents quite a good opportunity on the short side. I think things like TRB do. Still got things like BNB trading up at the range highs. And like you've still got this scenario here where you've just tapped into the highs again here, and there's a really good downside target of the 290s or hopefully the 270s. As a trader, how much time are you usually thinking ahead? A day, a week, a month? I mean, that really depends on you as a trader. Like, if you're a scalper, then you'll have some future thoughts because you need to be aware of when the scalping conditions may potentially change based on, the higher time frame picture, or, whether or not you care about the dates in the calendar where certain events will be occurring, etc. And then as a swing trader, I would say I'm probably thinking like 2 weeks out would probably be kind of my overall thought process. Carve along for a hedge. I don't know why you'd want to hedge this region yet. Like, I don't know why you would be shifting more towards long hedges here. I mean, like, everything looks as though it's breaking down, so I'm not necessarily sure it's, like, the time to be hedging positions. So, yeah, so, I mean, sure, if you want to hedge, but I would just be, like, a little bit cautious, I guess. There would seem no reason to me to be hedging yet. We're not seeing any strength anywhere, right? And, like, even though Carver is strong, like, Atom was strong last night, you know, Atom was up whatever percent, and even held up relatively well in the kind of intermediate price action. It still responded negatively now. CHZ looks like a good short opportunity, but always reluctant to enter on these coins that have pumped hard. Yeah, I mean, like, I've always, where possible, try to avoid some of the strongest coins in terms of trying to get short on, because I think you fall into the trap of the kind of the gravity effect, where you look at something like CHZ and you say, well, it's gone up a lot, therefore it has to go down a lot. So, you know, it's like CHZ would have made a great long opportunity. The same with some of the other stuff that, you know, popped off, you know, in the last couple of weeks, whether that be OP, whether, you know, that be TRB, you know, kind of all these alts that started popping off and gave great returns on the upside. When it comes to the shorting side, you basically want to take, like, the other side of the argument to that, which is, like, what are the coins that really did fuck all during that period of time? What are the coins that just sat there and really performed like a piece of shit? Because they're going to be the weakest on any sell-off, right? It's like, if no one was buying them during this little, like, month-long rally that we've had, well, then who the fuck is going to be buying them when the market starts selling off? So I would kind of, I always try and steer away from the, oh shit, it's rallied a lot, therefore it makes it a prime short candidate. And instead, I'm more interested in, well, what has rallied barely at all, and therefore would make a great short. Aren't we doing the same old pattern for the last couple of months? Prices drop ahead of an event, then slowly grinds up, then blasts up after the event. Potentially. I still think that indexes could try and tag higher. I think that SPX and NQ both have levels that are above here that would still make sense to try and trade into. Again, like, all I know for now is that the market doesn't look great. Would you blindly short TRB? So I have pretty much the top of TRB. So I don't think I'm really in any position to start saying, here's what you should be doing. My short position is here. Right. So, like, I wouldn't say blindly short it. It is still a very strong market overall. So I'm not necessarily sure it's just like blindly short it, but I think it is one of those markets to pay attention to given the divergences that are present on the higher time frames. Can you explain what was your trigger for TRB? Yeah, 5-minute divergence up at the highs. This is a 5-minute divergence over here between these two highs. I took the trade based on that, and literally this happened. So this is one of those super fortunate positions. I took a lower time frame short position based on just a 5-minute divergence between the two highs here, and I literally went away and came back, and I was like 10% up. Like, the market just utterly puked after this level. So it was incredibly fortunate. Incredibly fortunate. Tron chart, yeah, Tron's like just a piece of shit, really. It's just crazy resistance at 7 cents. Weekly RSI retesting the 50 level. To me, it looks like an easy short market, and then it looks like an easy long market as soon as this is passed. So, you know, first expectation would be this because of resistance. If it doesn't provide that and it provides this, it's an easy long market. So it's at a really nice point, but absolutely first priority would be short. What size leverage do you use? The biggest I can. Leverage is purely a tool that you can utilize to mean that you don't have to have all of your money at one location, right? That's it. it's not indicative of anything. It's not, really a talking point. It's purely there so that you can utilize more of your capital whilst having less capital at that location. On your Alpha Illustrated interview, you said you were doing a certain setup where you would pretty much get a daily signal, and sometimes you would miss it. It was tick-based Renko, and it was just divergence plays into tick-based Renko. So it was just, there's no time frame involved, it's purely price action. And yeah, it was producing at one signal a day at its worst, multiple signals if the volatility was good, and depending on my tick sizing and frequency of trade. But yeah, it was just divergence plays, but based on Renko and just having tick Renko instead of time based. Let's take a look at the indexes. That's a terrible reaction. So this is the move ideally I think that we could still tag, is this top level here at 1400. So this is the upside that I would like to see, just because it's the untested region. But we have potentially hit the liquidity hunt here in terms of the 13,550s being moved above. Everything kind of overextended. 12-hour putting in a divergence here on the awesome oscillator as well as the RSI, and then SPX as well, obviously doing the same thing locally above the highs, and with the 4-hour giving the divergence all the way across this region. Again, SPX taking the highs here, but does have the untested region just above. So, I mean, probably the biggest fuckery here would be a move back down here, the push up here, then the death. Like, this would probably be the biggest fuckery that we could get. So we're finished with our index analysis now. What are your thoughts on the coming FOMC minutes on the PA? Do you think it's priced in last week? I'm not necessarily sure the minutes are going to reveal too much. Like, the Fed at the moment is quite data driven, right? And I don't think there's anything that's a shifter to that. Sure, like the tone of it might be, slightly more hawkish, but I don't necessarily think it's a big deal today. And also the speaker, no one gives a fuck really unless Powell speaks. No one really cares. So I think it's a bit of a kind of a non-event situation. Still bullish on precious metals, yes. The BTC hedge you took this morning, when do you close the hedge? When it's turning and coming back to you at break even, or leave it run lower just in case? I mean, once you get the reaction above the level that we were looking for the reaction from, which is 24.5, then you can close the position down. Right? Like, the market is responding in the way that we anticipated in terms of the rejection, and then the short side runs. How is your ape short going? $6 enough? As in $6 profit? Because the price target is sub $1. That's sub $1 is the price target. We want to get to the bottom of the range for ape. This is a play we'd like, is the bottom of the range. So I think this is the first nice area here, sort of low fives, and then bottom of the range ideally. That would be the ideal play out here. I don't see why there's any reason to stop this position. I mean, can you please look at silver? Yeah. So I think we had slowdown across all three highs, very similar to the other markets. Really big slowdown across the highs. I'd expect us to get back down to the 19s again. I think trading back into this 19 region is probably likely. Good divergence across the highs as well on the bearish side. Triple highs here, triple div on the AO. You've got the triple div on the RSI. You've got the awesome oscillator divergence as well. So I think correction that was coming. Loss of 1980 isn't great, but it's certainly the area we would be looking to reclaim if there's going to be continued strength. Negative side of this is that we've tapped into the former support area and look as though we're rejecting. So basically this level here still has to hold from a high time frame perspective at 1850s, but I think I can see us easily coming back down to the 19s again. When you're eyeing a 4-hour support, do you wait for a break on the 4-hour time frame? Yes. Do you enter straight away at the close below? Yes. Do you wait for a pullback from the other side every time? No. Yeah, it's not a great look at all for OP here. You know, as soon as it lost the low, you got the small rally here to the 160s again, and then fresh low creation, bounce off the 50 level. Same with the 4-hour here. Not a great overall picture. Like, if we can try and hold this and sweep, then maybe bulls have a shot. You know, if we can sweep this, close back above, maybe bulls have a shot here. Awesome oscillator looks as though it's slowing down into each low. That's a relatively positive sign, but also it's like fucking thin air here. So if we do go down, I would expect us to get back to that $1 pretty quickly. Why is ETC showing more strength than ETH? Is it? I mean, I don't necessarily think it's showing more strength. I think ETC was like a really poor performer yesterday. Had another good rally, but I don't necessarily think it's showing strength. I think ETC is also one of the best shorts available on the market right now. I think it's a really good market from a short side perspective. UK announced 10.1% record inflation. Yeah, what an achievement. It's a fucking record. Of course it's good. Like, AAVE looks heavy too. Like, I hate this. This is... So yeah, like, again, this is another really good example of like a market that just looks tired, sleepy, needs a rest. It's had a good run, needs a nap. And, you know, that's the way that a lot of these alts feel. Do you rely more on the AO div than the RSI div? I think the AO div is better for longer time periods. So when we're kind of looking at exhaustion of a rally that's been, you know, decent in length, you know, talking over a month here for this kind of AAVE region, then I think the Awesome Oscillator does a very good job of continuing to map the decline in momentum, whereas the RSI is kind of all over the place through this region. SHIB? I think you just wait until the lower time frame high is gone. Like, if you want to get long on SHIB, you just wait until this level breaks. Wait till the 1650s go, and then I think you've got a trade. I think the trade from here is, you know, super simple. You play the breakout, it stops below, you challenge, you target the highs. You probably get an easy 10%er if this does go. So I think it's just the lower time frame level you can just play against here for SHIB. Pretty simple one. Oh man, LDO really made it to the bottom of the channel already, huh? So again, just a really nice kind of like channel thought process for LDO. At the bottom of the channel now. RSI doesn't look particularly good for this this position. I think, again, it's another one to watch for on a breakdown. Yeah, and divergences between the last highs. We still approaching the market as take whatever you can and run rather than look for big wins. I mean, that depends on you. I think that now is still one of the better times to be kind of holding short positions. I think the market has looked for a while as though it's going to come down, right? This kind of these continued momentum drops. I think the difficult part has been holding on to shorts because the bias flip-flopping has been quite strong at these levels, which I think is natural because you've had like a combination of factors that would cause you into that bias change pretty consistently. You know, you've had index strength and expecting crypto to catch up or tag along to that. You've then had the fact that BTC hasn't challenged 28k while ETH has been very strong. So I think you've always had these kind of touch points that have been like, okay, well, you know, this could still happen. BTC could still run this. You know, it might catch up with indexes. ETH could get to 21, 2200. You know, like, I think there's been plenty of things that would cause you to change bias or not hold the short side. But I personally think that this is a region for me with the strength of the divergences we have on some of these markets to try and hold short positions through. Like something like ETC, I think, is a good example as well. You know, ETC has a 3-day bear div. It's one of the only markets that has a bearish divergence on a time frame that high. And it's up against its bearish market structure high. So it's putting in the higher time frame, lower high with a 3-day bear div. So for me, they're the sort of positions I would like to hold. I think that the decision point comes around ETH still. That's the one. It's ETH at 1700. That's where the decision point is. So still expecting that to make or break the market. ETH holds 1700. Market probably turns and looks pretty decent. ETH fails at 1700. Watch out below. How do I learn to stop being greedy and take profit? A lot of the times I have like 5% profit, but end up closing positions hours later with very small profit or break even. Well, I think that's probably the market conditions. So it's appreciating the market conditions that we're currently in. So the fact that we've been very, very choppy. We've been super choppy, and you've had to be super active and alert in order to take trades through this region. The dreams of holding on to longs or shorts have kind of been dashed on both sides over the past week or so. So I think you have to appreciate what is the market currently doing and what has your performance previously been. And I also think there's kind of a lot of weight in identifying what sort of usual kind of pivot points you have from your positions. So if you find that like 5% seems to be a number that you clock and you always then, start losing from the point of being 5% up, I think you have kind of a nice number to just hit the close trade button on. If you get to 5% profit, close the trade out. Done. Finished. And then just repeat the process. Because actually, you're doing something right. If you're hitting 5% trades consistently, you're doing something right. You just then need to learn to close them in order to bank that. That's exactly what happens when I close. It goes up another 10%. Yeah, that's trading though. Like, that's trading. You're not going to catch everything. Plus, we're programmed to remember the events that hurt us the most. So, like, all of the times that you've performed shit and you've not closed your position from being 5% in profit, right? You just group all that together. And then the counter argument is, well, that one trade I did close for 5% actually ran another 10%. So actually, if you just kind of look at it, your performance overall would be significantly better if you closed out all of your trades at 5% than the one example your mind will cast you back to where you closed and it continued pumping or dumping. I think MATIC is a poor looking chart on the higher time frames now. This is the failed breakout here of this level at 95. We run up into 106, reject, move back, retest the former level overnight, and then puke on the back of that. So not an attractive looking market. Yeah, so like your ranging thesis. Yeah, I still think it's one of the likely outcomes. Just range it for the rest of the year. Don't get fresh lows. Everybody gets hyper bearish again when we get to like a midpoint, and then we're just going to end up chopping for the rest of the year. Low volatility ranging markets. Yeah, I mean, like we don't, on the higher time frames. That's what I'd take. I'd take something that that just kind of, I don't even know where the boundaries would be for ETH. I don't know if it's going to try and use this 2000 level and I don't know, maybe the 14s. I can't imagine that the range is actually gonna be either here or back at the true low here. I can't imagine I can't imagine this is gonna be the range. It's like 100% range. I mean, like, it could be, but I don't imagine this being the one for ETH. Fucking Rubdon comes in. Do you have any tips on identifying conditions? For some reason, I always adapt way too late. Well, like, when you say adapt way too late, I guess it depends on kind of where your struggle point comes and what time frames you're operating on. Because when we're identifying conditions, we can say things like there were plenty of 3-day divergences on the market, there were plenty of daily divergences on the market, bull divs down at the lows. The market just kept on rallying. The market structure never really broke at any point. Significant resistances were overcome, so you had kind of good indication of uptrending conditions and why pressing green was the right option for a long period of time. And now you're in a period where we have bearish divergences, we have higher time frame range tests, we're up at resistances across multiple markets, indexes are also struggling slightly more at this point in time after taking some liquidity from the cluster of highs. So the way that I set out the conditions is that the higher time frame still governs the overall thought process. So if I know there's the presence of daily 3-day bull divs, and then we get a pullback on the 4-hour, we're still in an uptrending market, or we still have the conditions primed for continuation to the upside. We're just pulling back on the low time frames. But the overall kind of direction and plays are still up. Whereas now, I think the conditions are slightly different. So the higher time frame bias would set more for the downside, and therefore lower time frame bounces would be something to fade. So adapting to the conditions is really dependent on where your overall base is set. You know, what are you aware of? Are you aware of the higher time frame picture? Are you aware of the hourly picture? What does that look like? And then how you make your plays based on that. Yeah, CRV's always been our example, right? It's keep on referring to it as kind of the CRV market, and I think this is a really good example chart. It's probably the first market that I think started to struggle at this region. But yeah, it's kind of the CRV range market. So again, with all of these markets now, I think it's retest of, you know, kind of midpoints like this for CRV. Probably a bounce, maybe consolidation, and then you've got next decision point. Do you go back for the highs, or do you instead, you know, from here fail, come below and head for the lows? But I think CRV has been a very good indication of the market as a whole when it comes to the kind of this range bound thought process. I think SUSHI is another one as well. Slightly weaker, but again, trendline breakdown. There's so many markets that I think are just range bound. Atom, BNB, CRV are probably the best markets to map out higher time frame ranges for. They've got very clear resistances. They've got quite clear midpoints, and they've got really good lows. And then Link is another one. It's slightly more awkward, but Link is another one that, right, similar kind of thought process with Link as well. Range highs here. This is the retest point just below $8, and then you've got bottom of the range over here. So if you are looking for the kind of higher time frame range trades, then I think they're the best ones to be. Curious as to why you draw divergences based on candle bodies versus candle wicks. Has always had me wondering if wicks are where price actually travel versus close on a more arbitrary basis, and why is it bodies that you use? Because RSI uses close, so wicks are irrelevant in the mapping of RSI. Yeah, so the wick is an irrelevant calculation in the RSI, which is why RSI is actually just better when it's simply used with line charts, because it just gives a cleaner picture. And I've always been an advocate for whatever you draw on a candlestick chart should appear the same on a line chart. So if you're drawing a divergence, your divergence should look identical on a candlestick and a line chart, because that's what the RSI actually cares about. Way more people should use line charts. They're so helpful. See, I think this is one of my favorite questions I've ever received. What would be your general advice on how to invest for a person with a normal job and little trading experience, e.g., a dentist? It's very interesting that you just pull out a dentist here. Like, are you introducing yourself as a dentist? Is that what's going on here? Are you basically saying, I'm a dentist, what should I do? It would just seem like a really odd job to pull out as your occupation. My advice for anybody that's kind of newer on the investment side, doesn't have much trading experience, is super simple. Stick with the majors. Stick with BTC, stick with ETH. You've got less to worry about, you've got less to manage, you have less you're going to risk being scammed by. You're kind of just in an overall more pleasant investing environment if you stick with things like ETH and BTC. My personal preference is always ETH over BTC. I'm a big ETH fan. if you want to try and get involved, because all of your cool kid patients, all of the Zoomers come in to get their teeth checked, and they're all shouting about, you know, SHIB and Doge chain and the future of dog coins. Take a small amount of your investment portfolio and fuck around with some coins that could run a 50x. Right, but the majority, if you're talking about long-term investment in the space, you should probably just stick with the majors. Less hassle, less concern, less chance of being scammed, less chance of being rug pulled, decent growth over time. What do you think of aggressive October 31st puts? What does that look like? Let's take a look at ETH. Halloween? Yeah, I don't think that's bad. Gives a pretty good time, pretty good length to play out. So yeah, I think that's I think it would be fine if that's something that you think is the play. I don't see any problems with that. I used to work at a dealership. Best top signal I've ever had was all the sales guys started trading stonks. I don't necessarily think that was the top signal. I think a lot of kind of normal people, right? The normies, I think, got a huge amount of value from their investments. Huge amount of value. I think the bigger problem was when the normies were flexing P&L, flexing purchases, and not taking profit. Like, that was the bigger problem. And I saw like the tweet today about, you know, she owned like a beauty salon or something. It was like netting like 40k a year, and then put a ton into investing in crypto in the COVID crash and did 7 figures and didn't cash out a penny. Like, when you have on paper millionaires and people aren't taking profit, that's usually a sign things are bad. The only other bad one was probably Luna, because like everybody knew about Luna. And I don't think you should have known about Luna. When most normies knew what Luna was, that's probably a bad thing. Because like, I don't think Luna should have been top of the investment list for a normie. Is scalping with small sizes good for beginners to get into trading? Yes, it is. Thank you for the sub, man. But yeah, it's a really good option. There's one school of thought which is basically the more trades you can take and the more kind of experience and practice that you have with the markets, then obviously the faster your development is going to be. So when it comes to trading regularly, lower time frame trading, then I think that is absolutely a good option. Are we at the point in the market where like people start doubting the breakdown? Because that's always one of the classic things, is like the chart is telling you that markets are breaking down, we're losing diagonals, we're falling out of supports, and then we get to like a period of doubt where maybe people start talking about things like deviations. Maybe they don't believe the breakdown strength, and so they start like counter trading their own logic and disregard the simplicity of the market just being a breakdown situation, right? Like, look, so it just breaks the diagonal and then carries on selling. But I think a lot of people start counter trading their own logic because they believe the market can't be as simple as it's just breaking down. Right? Like, there always has to be like a 200 IQ counter logic reason that forces you to close your positions or act differently. In terms of execution, taking the RSI divergence trades, am I right in assuming the following? 1, taken to a level of confluence. 2, peaks and overextension. 3, clean structure. 4, market entry based on the first opposing candle close. Green for bear div, red on bull divs. Are you scaling in with multiple installments as price continues to diverge? Correct on 1 and 2. Clean structure. It's harder for me to get your definition of clean structure. But if you're referring to things like the divergences looking clean or like the market structure looking clean, then fine, we'll take it as 0.3. And then 4, the entries aren't usually as tight as that. The entries can be anticipatory entries, based on the fact that if we're looking at like a 12-hour divergence, but we start diverging the 15-minute on a third leg higher, for example, then I might take a trade early based on that. And the process is much more about scaling into the position, especially on swing trades, than it would be the all or nothing approach. The only counter to that would be that if we had a divergence structure and price started to, let's say, sell off and we lost a key support level, then I would be much more inclined to take a full size position immediately into that than I would be if the divergence is still under development. After a 20% move down, do you think it's still plus EV to hold a short to the next support level? I mean, depends on the market and the signals, but like I said, when you've got a 3-day divergence here, for me, yes, like this makes sense. It would be a higher time frame kind of basis for the trade. I still think like the really juicy level is like 25. I think that's the super juicy level here. I also retook the ETC short, and now my PNL is about the same as how much I lost on getting stopped out. Really fighting with myself to close it and get out break even overall. Well, in that situation, if you're nervous about, ETC pumping, especially given where it is, because this is a protection point for the position, then you can always close the position, be flat and neutral again in terms of PNL, and then take the position on a loss of this level. So again, all of these setups, especially on the higher time frame, they're going to give you opportunity to enter. So if you wanted to get out of the position now, and you wanted to come back in on the loss of this level instead, right? When we break down, have a stop somewhere else, and then take the trade down to the lows, then you'll have another position. So, all of these markets will offer you multiple attempts to try and short something. So there's nothing wrong with being like, you know what, I'm going to try and close up here because, this may bounce, or I just want to get my PNL back to neutral and then reset and restart. And fine, do it. Right? It's absolutely a fine option. Absolutely. What are the near-term plans? I think just, for me, watching the indexes, because like I said, I think there's still a world in which they get another fresh high in here before they get into the kind of untested breakdown zones slightly above. So it's watching the reaction of crypto to that. So the reaction around 1870, for example, on ETH. And if we start breaking back above things like 1870, then it's looking for the potential high creation on these markets. And then again, once all the markets align, looking at getting short. Until that point, I'm just going to sit short and continue to wait it out, because I still think based on the divergences, it's the most sensible play. For the ETH retest you mentioned, what would you look for to determine which way ETH will go? Well, like, you're just looking for whether or not it reclaims it or rejects it, right? So we would classify the rejection as, moving back below some sort of lower time frame low through this region. And obviously if it gets above, then we'd look in for retests into it or breaks here. What coins are you looking to accumulate for spot long-term investment when you believe that we have already bottomed in the future? ETH and APE. Why APE? Because I think that Yuga have been the best deliverer of NFT content that we've seen so far. I think that Yuga have an established brand. I think that the kind of BAYC brand as a whole will only continue to grow and strengthen, especially as kind of, the digital collectibles become a bigger part of culture. And I think the other side will probably be a really positive experience overall. So it just represents like total exposure to the NFT space plus also the brand, which I kind of like. Are NFTs all shitcoins? I believe so. Yeah, I believe so. Well, like my only really like thesis behind that is just the fact that they're traded like shitcoins, right? Like that's my underlying thesis, is they're traded like altcoins. That's all. And no one's in it because they truly like. I mean, that's not necessarily true. Some people associate with the imagery in the community, which is far more powerful. But in reality, people see like a collection popping off, they'll buy a couple, they'll flip it, they'll come back out. They don't really care about the project. All right, let's wrap up there. So I think I've given a pretty decent overview in terms of like my overall thought process for the markets at present. I think that I would be keeping this level on ETH. I would obviously be seeing what goes on in terms of what the minutes are gonna say this evening, and then kind of just running from there. I don't think there's going to be anything major that's going to be there. Sure, the tone could dictate, the way the markets move. I think the indexes have a small chance, but still a chance, of making fresh highs into the untested levels. This should just be the first reactionary push lower before they do go again. And therefore, I keep an eye on 1870 for ETH. Aside from that, I think that probably the play for me is going to be if ETH makes it above 1870s and reclaims this level, then I'd probably hedge short positions again with that push, and then look at trying to get ETH into fresh highs if that situation develops. If not, it's just going to be hold shorts where possible and try and take advantage of any stronger impulses to the downside. It's a pretty negative day overall for a lot of these markets. There's going to be lower time frame divergences developing. There's going to be bounces in lower time frame price action. Is it going to deter away from the fact that on the higher time frames, 12-hour and above, the markets still look pretty weak and they look as though they've been tiring for a number of days now? No. So right now is really about understanding where you as a trader want to position yourselves. Are you positioning yourself for kind of, a swing trade to the downside? Are you poorly positioned in a short, and are you going to get blown out if the market pulls higher from some sort of RSI divergence through an area like this? Right, what does your entry and what does your thought process kind of represent for you in your trades? That's really what I would be considering. Most people don't really align as a swing trader or as a scalper. They're kind of just taking trades and then hoping that their targets get hit. So you really need to pay attention to what your entry is, where price can retest. Like if you're short from like 1840 on ETH and you're looking for 1700s, you're probably not going to survive a divergence play out through this region. Are you better doing things like cutting your short positions and waiting for retests? Are you better hedging your positions? You better hedge the position into a retest, cut the long hedge, ride the shorts, add to the shorts, whatever you want to do. There's a number of ways that you can play this. The biggest thing that you can do is like be fluid in terms of what you're doing and how you're trading, because there's so many ways of accommodating bounces, playing for bounces, adding to shorts, taking some off shorts, re-adding again, right? There's so much you can do. Don't just like sit there like a fucking tree and just don't do anything, right? Like you just got this inability to action anything. If you're short, let's say you're short 100 ETH, right, and you're nervous about a bounce, right? Take 25 ETH off the position, offset your entry, get a bit of breathing space, wait and see how the market reacts, add if you get a retest, take some more off if we start to break through the levels, right? Don't just fucking sit there and do nothing as though you can't act. Like you can really sculpt and create the positions and manage them as you need to. And I hope everybody has a wonderful rest of the week. I'll be back on Sunday night, 9 o'clock BST, the usual time slot on Sunday, and we'll see how the rest of the week has turned out. Should be an interesting one to catch up on based on the price action over the next few days or so, and especially on how the indexes respond. So best of luck out there. And thank you very, very much for the generosity in the stream today. Many of you very kind with your subs and gifted subs, so thank you once again for that. I'll be back on Sunday. So enjoy the rest of the week, enjoy the markets, and good luck.